Our pal Jay Powell, who also happens to be the supreme leader of the stock market with total control over it, he's in an interesting position because, part of his job is analyzing how the economy is doing. And then once he analyzes it, he has the power and the levers to pull to completely take what's happening in the economy and distort it in the stock market. He's the most interesting middleman there ever was. And it's funny because he's warning about just how bad the economy is and how many people are going to be screwed over, the inequality that this is all going to cause, while at the same time he's kind of creating a lot of the inequality because of what he can do with the stock market. I mean, this is his life, right? With Mrs. J. Powell, I bet he's thinking about other women. I am going to print so much money. Classic printer Powell. And unfortunately, I had to take out all the spicy words from this meme because YouTube doesn't allow it. And the YouTube algorithm is my supreme leader. Aye, we mustn't anger the gods. But let's see what Powell has to say about where the economy is heading and what he's doing about it and whether it's right or wrong. Tough question, obviously, which is why I want to hear your opinions down below in the comments. And of course, it's more important than ever to have the right strategy in place so that you don't get caught up in this market. Looks great now, but there is danger ahead. We even got Powell talking about it, as we're going to discuss. So you got to make sure you got things in place to protect you. And that's why we got this free training. There's a link to it in this video and down below in the description and comments. Definitely check it out. It's worth it to make sure you're protected. Now, what's happening with our buddy Jay Powell? He's saying this pandemic downturn could widen inequalities. I don't think it's a could. It absolutely will, but let's see what he's got to say. So Powell said that the economy's rebound is likely going to take a long time to reach all corners of the job market. And the already disadvantaged groups are likely to suffer the most if the downturn drags on. So yeah, some of the parts of the economy are seeing a modest rebound, but the levels of output and employment remain far below their pre-pandemic levels. And there's still a lot of uncertainty around the timing and the strength of the recovery. Now, obviously, it's great news that employers are hiring workers again, but it could take a long time to get back to where we were. So Powell thinks, and I think everyone thinks at this point, that more support from Congress and the Fed are going to be needed before this is all over. The shock that we received, that the economy received, was the largest in living memory. Now, of course, our fiscal and monetary response, all this money, has also been the largest on record, but the question is it enough? And that's why he's saying there's a reasonable probability that we're going to need more, both from the U, which is he's talking to, fiscal policymakers, and the Fed. He's saying that the longer this pandemic went on, the longer lasting the damage from the downturn is going to be, especially for lower income workers. Time out of the workforce could erode their skills. So low income households have experienced by far the sharpest drop in employment, while job losses of African Americans, Hispanics, and women have been greater than that of other groups. And you just look around, that's the case. The people who can't work from home lost their job. But the more white collar jobs where you could just log in from a laptop, yeah, those people still have them. Now, unfortunately, the layoffs will come for that sector too, but not yet. The low income households are the first ones to get hit the hardest. So if this isn't contained and reversed, the downturn could further widen gaps in economic well-being. That the long expansion we previously had was closing, which I actually don't agree with. If you look at the grand scheme of things, very few Americans are actually invested in the stock market because most people don't have enough money. They don't have any savings in the first place. So part of the reason why there is such a huge wealth gap now, and we talked about this with Dalio's stuff when he brought up how capitalism was failing, which is why he's a little commie now, but no, his points were true. So the thing that happened in this last huge run that we've had since 2009 is that the people with money in the stock market, who we could assume already have some money, meaning they're in the upper tiers of the economy already, even though it might not feel like that, well, they were really able to build their wealth. But anyone who wasn't in the stock market didn't get to get a piece of any of that. And that's pretty much what happens when you kick the can down the road, economically speaking. So we papered over all the problems in 2008, right? And all that stimulus and liquidity, the high liquidity that we've had in our economy, has pushed these stocks higher and higher. That's how the rich keep getting richer. Now, obviously, I benefit off that too, and if you're watching this channel, you likely did as well. What are the solutions to that? Well, one potential solution is higher taxes, which kills me on the inside to say that's what we should do. I'm not even completely sure about that. Like, why do I want to pay more capital gains tax? But that is a way to redistribute the wealth, even though it sucks for us people in the market. So you already had that huge force widening the economic gap, and now you have this pandemic. So all the lower income people lost their jobs, and so far, maybe it's been okay okay, I've heard anecdotal stories that people are getting enough money to the point where they don't want to come back and work because the government is providing. But like I said, anecdotal stories. I'm not fully sure how people are living without these jobs. Tough to get some real news, but I'm going to assume that people are worse off than when they previously had those jobs. And as I already explained, white collar people still have their jobs, still getting paid. And then on top of that, this massive stock rebound that we've had. Everybody's continuing to make great money yet again. So that wealth gap is widening even faster now. So yeah, I don't agree that the long expansion closed those wealth gaps. I think they, widened them even more, but I do agree that they're widening even more now. But what Powell says is that what we learned during the last long expansion is that a tight job market is probably the best thing that the Fed can do to support all low to moderate income communities. And a tight job market is when most people have jobs. So the jobless rate in February of this year was 3.5%. So in Powell's opinion, that's the best way to keep everyone wealthy and keep that gap smaller. He also said that a full economic recovery is unlikely until the public is confident that the disease is contained, which might be happening now. Well, I don't know. I guess I wouldn't say it's actually happening, but people are definitely treating this CCPV very differently than before. Is that because they're confident that everything is under control, which they shouldn't be? Or is it more because they're fed up and they're like, you know what, whatever? I would probably say it's the latter. So I was in a restaurant today picking up food and I looked around and this was the first time that I actually saw people inside the restaurant. Tons of people. It's not a huge restaurant. There's not amazing circulation and no one's wearing masks. Not saying that they should be wearing masks, because how are you going to wear a mask while you're eating? But it's funny because the sign on the door says you must enter with a mask. So I'm thinking about it. How does this make sense that you're going to go from your car in the parking lot to the restaurant while being outside? That's the important time to wear a mask? Because once you're inside, you're not wearing it anyway. So what is this stupid superficial rule? Now, we've already beaten this mask topic to death, and I'm not saying those people are wrong or anything, but I'm just saying, is that a signal that people are okay with things? Because it was good to see people inside a restaurant, it's good for the economy. But I look at some of the people in there, like super old, and there's like a group of 6 senior citizens. Probably not the best idea, but they might not care either. So yeah, things are open back up, but cases are spiking too. So maybe people don't care right now, but they're about to care a lot again when they start seeing, people around them get sick. We'll have to see how that plays out. But yeah, most people I know, most people I see outside, the CCPV is definitely not as big of a deal as it once was. For better or worse, we're gonna have to see. So Powell said the Fed is committed to using their full range of tools to support the economy in this challenging time. But he needs help from the government, because their legislation is what can provide direct help to people and businesses and communities. Because what does the Fed really do when they're stimulating and printing that money? It's more indirect in the sense that they could lend via credit facilities that help municipalities and businesses. So actual direct support, again, has to come down to Congress. So he said that fiscal action is key in limiting long-lasting damage to the economy. One of the things he suggests is continued support for workers, because there's going to be an awful lot of unemployed people for some time. So even if we start putting people to work really fast, which may happen, there's still going to be plenty of people who don't have jobs, and many of them for a while, because there's still no jobs in travel, accommodation, and various other places. There's still a huge hit to the economy. Now, other people have chimed in with their plans too, like more than 100 economists, including people from the Fed and the White House. They called on Congress to pass another coronavirus relief package before the end of the summer. So they wanted continued support for the unemployed, new assistance to states and localities, because they are getting bled dry, and they were already in trouble before this, going bankrupt left and right. And they want more investment in programs that preserve their employer-employee relationship. So more money to businesses, small businesses, that whole thing. And additional aid to stabilize aggregate demand, so more transfers to people, more $1,200 checks. Other people are saying more unemployment benefits. They want temporary earned income tax credits to supplement the salaries of those people that are going back to work. Another thing is to send at least $500 billion to states and local governments to help avert cuts that they're going to have to make, eventually to public education and other services. But they don't want those states using that money to address their pre-existing pension shortfalls, which is what I was talking about before. They were already in trouble. So more stimulus is probably going to come, right? Because what other option is there? But it also makes you think about what is the right answer here. Is Jay Powell and the rest of our government, are they doing the right thing? Because what you're doing again is kicking the can down the road, which is basically done by politicians in every crisis. No one wants to let anything fail. Now, I will say in this CCPV situation, it's different. It wasn't wild speculation that caused the economy to turn over. It was literally a virus. So there's always comments on these videos like, we're just headed off a cliff here. We're going to destroy the dollar. We're going to keep printing, ruin everything, which could be true in the long term, because what are we doing with all this? We're distorting things more. I've showed you guys graphs on all these previous market review videos of how many zombie companies we have now. They're just being propped up. It's not like the virus put them down. They were already terrible before. And the whole point of a correction cycle is to clear a lot of that rot out of the system. But that can't happen when we put so much stimulus into it. So when every single macro guy thought this was it, this was the end of the long-term debt cycle and everything's going to come crashing down, it didn't happen because they were able to paper over it. But yeah, now the can is kicked for something worse down the road. So if you look at it that way, you say, yeah, this is terrible, this is stupid. But also, like, what is the alternative? Were you going to say no stimulus? No, let's preserve the value of the dollar and let's just go into a deep depression. First of all, no politician would ever do that because they would never risk their career like that. But also, even if you weren't a politician and have all those things behind you, would you be willing to let that happen? Take that gamble? Because you don't actually know what's going to happen if you don't stimulate, right? At least if you're stimulating, you're like, well, we did the best we could and things still all fell apart. I remember reading Hank Paulson's book. I think it was called On the Brink. It was all about the 2008 crisis. And it kind of went into what they had to look at as policymakers to bail out the banks or not. So that's a hotly debated topic, of course. Should we have let them fail? But are they too big to fail? And people will argue that forever. But when you read the book, it kind of gives you a good idea of what they were facing, like what was right in front of them and what was happening day to day. So when you're getting that information and you're wondering what to do, it seemed very scary to actually let the banks fail because it looked like it was the end of the world. So from the outside, maybe you could say, oh no, it's a terrible decision and things were fine. You could do this, this, and this. When you're actually inside looking at it, yeah, it didn't look too good. So if you were in that situation, if you were the guy, if you were Hank Paulson, would you have said, no, let them fail? And again, you can't know what happened with the alternative decision. There's no magic scenario playing game where it's going to show you exactly what's going to occur, especially in something as complicated as these economies, where we have all these tertiary effects. It's just dominoes, everything affecting everything else globally. So yeah, what do you do other than stimulate? Either way, I would like to hear your thoughts about what should be done right now. It's a tough question. One thing I did like that we talked about in a previous video is a New Deal. So huge infrastructure spending. So it's stimulus, but it's like very productive stimulus because we needed to fix this infrastructure anyway. We're trillions behind on it. All our stuff is super old. So if it needs to be updated, let's just do it now. Like, yeah, you got to print, but at least people are getting paid and we're getting a good asset out of it. Which always goes back to the other argument, when people look at the debt of the US, they're like, oh, it's too high. This is terrible. But when you look at debt, you also want to look at the other side of the balance sheet, which is the assets. How many assets do we have in the US? Like our companies, our institutions, things like that. So if we're going to go into more and more debt, then we might as well be building those roads, schools, things like that we need, because then we have productive assets. But let me know your thoughts below because this is not over. Everybody seems to be real confident when I look outside. And I talked to my financial advisor buddy. People are still piling money into the market. I'm seeing it through this YouTube channel as well, where me personally, I'm saving a lot of cash on the side, doing the same thing for the business. And I know I'm more conservative than most people, but I would have thought more people would have been, saving money. But it's interesting to see that the opposite is happening. Is it an effect of all the stimulus and all the checks that people are getting? I don't know. But I would not be confident in saying everything is okay and dandy going forward. And according to this, Powell isn't confident at all either. But anyway, let me know what you think in the comments. And if you haven't already, make sure you check out that training because volatility is not going away. It's crazy times. So you want to make sure you got the right strategy in place. And that's what we'll teach in this training. Link in this video and down below in the description and comments. Also, subscribe so I can see you in the next video and we could talk again. Do that and I'll see you next time. Stay fallible out there. Bye.